we do deal with a lot of clients that come to us and ask about how to incentivize their staff, and there are a number of ways you can do that. And in fact, actually, the financial advisor sector, the most tax efficient schemes tend to be open to the financial services sector, to certain parts of the financial services sector. So we've set up a number of schemes in the past quite successfully. It's driven retention, and it's really aligned the employees' objectives with the owner's objectives to grow the business. And so they're a very nice, neat tool for an owner, business owner, to give a stake in the business in a way that there is flexibility to it. Because when you're okay, you talked about cash bonuses, and cash bonuses are easy to see and well understood, but sometimes certain types of employees are more driven by the cake itself and
Yeah.
having a stake in that cake, even if it's a small, even if it's 0.5%, 1% stake. Um, that often aligns objectives a bit better because the owner and the employees are looking for an exit and therefore to grow the top lines, as you referred to earlier. Um, and so if you can design a share incentive scheme that works from a tax point of view and is flexible from a commercial point of view, such that you don't have to necessarily give them shares, that kind of meets all of the objectives. And there's also, as I said, very good tax reliefs involved with that. So, from the employee's point of view, essentially, if you design it in a certain way, any tax charges are deferred down the line as to when there is an exit. From the company's point of view, when there is an exit, then the company gets some nice tax relief based on the values of the shares at that time compared to when the award was made. And then for the business owner themselves, flexibility, the attraction there is you're giving them almost a promise that on an exit they'll get a certain stake in the business. So that if people do decide to leave, it's not as difficult to withdraw the award. Um, Whereas
Yeah.
if you were to actually give them shares in the company, you've got all of the administrative considerations about voting rights and attending board meetings, and also about getting shares off them if they do decide to leave.
It's nice to have the whole of the team, whether it's the advisors, support team, to be fully invested, and they've got something that is going to grow with the business as well there.
Absolutely. And one of the things we find often when we speak to clients about these share schemes is there was often a misunderstanding about how they might work. And actually, what's useful about them is they are discretionary. So, you talked about it just then. There's different levels of staff in any business. You've got some at the
Yeah.
managerial level, some in the support staff. Um, so you can design certain of these schemes such that you only are rewarding certain people or certain levels of people. You're not required to, give shares to everyone, and especially in a private business such as these, that's the most common outcome. Whilst there are all share employee schemes, they don't tend to be taken up for these private businesses for those reasons.
Yeah, we've been involved in a few of those, and they tend to be for the larger deals. What I would say, I don't know if you feel the same, or whether there's a sort of it tends to work better for a deal of above a certain level. But our deals that we've been involved in is more around sort of like 4 or 5 million plus deals. What's your sort of feeling on the size of deal that works for these schemes?
And this again potentially is also a misunderstanding in the market generally. So the most sort of common scheme, the most popular scheme is an EMI scheme.
Yeah,
That's the one that brings the most tax benefits to it, which is why it's most popular. Now, the business itself has to be of a certain size. Above a certain size, you can't do an EMI scheme. But the majority of our clients would fit within that because we're talking about 250 employees, for example, in the group, so it's a group set up. And we're talking 30 million of gross assets. So for most clients we see in mid-market firms, they're all within that criteria. So I would say actually an EMI, whilst as you say, in a disposal scenario, in a sort of succession scenario, can be quite an attractive tool. Absolutely. I think actually they apply to any stage of the business cycle, business life cycle. And actually, you could argue that in a startup phase, from a pure um, tax valuation point of view, that's often the best time to get in because it should be the lowest possible value at that point. So I actually say, startups should be thinking about it as much as mature business because there will be more value to the awards at that stage. We do also look at things in the round. I've very much spoken about tax benefits and why you'd want to do it from a commercial point of view. Any business owner, as I'm sure they would do, should be cautious and conscious of, I suppose, not trying to give away too much too soon. We don't want to be
Yeah.
in, they don't want to be in a scenario where 5 years down the line, they've been incredibly successful, managed to sell. And we have seen it on occasion where a business owner has thought, oh, actually, was that person key to that growth of the business? So you do have to balance it out. And again, the beauty with these share schemes is it's not one and done. You can start a share scheme in year one and you can say it's X amount we're going to give away, and you can kind of stagger the award over time. You can give awards, as people start performing. So you're not stuck to making a decision in day one and saying, well, that's my share scheme now. You can look at it as you go along, and obviously admit people, new employees to the scheme as you go along.
The key attraction, Anand, for the vendor to take out an EMI scheme for them is what? Just remind everybody of that.
Yeah, so the attraction to the vendor is, again, in a way, if you're looking from a bottom line financial point of view, cash bonuses are nice, and often people do cash bonuses and EMI schemes. But in a way, what you're as a business owner providing to your staff or the staff that you want to benefit is you're giving them a way in. You're giving them a stake in the business that could grow, and even the business owner at that point doesn't necessarily know what it might grow to. So that's the attraction there. It's going to be very useful for employees and staff members, managers that are entrepreneurial and can see actually that's going to be of interest to them. So that's what I think one of the real attractions is. It's a retention tool.
What's the tax benefit to that person that includes those staff into an EMI?
Yeah, so from a company point of view, again, so this will benefit the vendor more than the employees, is the corporation tax relief that you obtain from EMI share option exercises. And so essentially what that does is, and it's quite a powerful tool because it generates a tax deduction, a tax relief, without incurring any costs, which is actually unusual. I think it's probably the only time that's possible. So that's very attractive for the vendor and a reason to do what is essentially a share option scheme. Basically, you get those benefits down the line when there is a sale. But from the individual, the employee, staff members' point of view, the attraction is one, you get a stake in the business, but two, you don't have to pay income tax if you designed in a certain way. If the EMI share scheme is designed in a certain way, if there is an exit, it will be capital gains tax rates. And most likely business asset disposal rates as well. So again, from the individual's point of view, I think it depends on mindset. But to me, if I was approached by my employer and I was given the chance to participate in the share option scheme, I would absolutely take that up. Because there's no upfront cost. That's the other thing. There's no upfront cost to the individual in taking it up.
Like all things, there are downsides and they need to be considered, don't they? But it's actually being able to talk to somebody like yourself, Anand, to see what's the pros and the cons, and then whether it's a viable scheme that would really suit the business.